All right. Hello, everyone. Happy Sunday. Welcome in. Welcome in. If we can do a mic check real quick before we get started, let me know how the audio sounds, connection, everything. Make sure it's a green light so we can go ahead and get right into it. Audio's great. Awesome. Thank you, Denisha. Hope everyone's well and ready for this trading week. Thank you. Hope you are as well, Denisha. Looking forward to it. So, all right, guys, we'll go ahead and get right into it. All good. Appreciate that, LN. All right, great. Happy Sunday. Olawale, what's going on, my man? Appreciate you joining us. All right. We just started the stream, so we'll let people join in, and we'll go ahead and get right into it. So let me pull up my economic calendar. All right, so interesting news week this week, as was last week. So we discussed last week the economic news drivers and the economic calendar, as that's very important. As you guys saw, many of you guys, I was getting a lot of messages of people having a hard time trading Monday through Wednesday. And by understanding how to use the economic calendar, that would save you a lot of heartache trying to trade those days that just aren't simply going to move because it's not programmed into the market to move on those days. So that's why whenever we discuss the economic calendar, how I'm trading it, how I'm looking at it, it's definitely important to take some notes there for sure. All right, so I think everyone should be joined in. So we'll go ahead and get right into it. So looking at the economic calendar for this week, keeping in mind time of week where we're at within the timing arrays of the algorithmic delivery, we just started a new quarter 3, also a new month, also given that it was NFP week. So there were several factors contributing as to why last week, especially earlier in the week, would be lackluster, which is why we weren't too active in the Telegram. Not really much to do other than wait for more information and let the market show its hand. And then we've seen that. Dollar showed its hand. Bonds are showing their hand as well, and also the index market. So now we have that clarity that we typically look for so that we can have these clear one-sided runs. We know exactly what we're looking for and we're locked in. So now that I waited for that information, it's presented it to us, it's clear. So now we'll go ahead and get right into it. I'm going to share what I'm seeing for this week and what opportunities exist in the markets. So let's go ahead and start with the dollar index. Let's go up to a monthly chart. And let me take off the drawings. All right, so factoring in monthly power of 3. Let's go ahead and start from this monthly. So looking at this monthly open here on July, we just opened up the month this previous week, which is why the first month of it, especially of a new quarter, I'm typically patient, especially with NFP week, as it can create erratic price action, extended periods of consolidation, and frankly, there's just better days to trade. So I'm not going to be in here frustrating myself trying to trade markets that aren't going to move. So looking at this new monthly open, we've opened. If we're expecting the market to drive lower, trade into these relative equal lows that we've been looking for some time now, and potentially this inefficiency here, we'd expect the market to open. We want to see a rally that we can then fade to then ride out the expansion. So I'm expecting this to be that manipulation of this monthly candle to then give us that expansion lower into the objectives we're looking for. So nothing much more on a monthly chart. Let's go ahead and get right into the nitty gritty here on the weekly. Awesome. All right, so these are just some key levels here we've been looking at for some time. We had the mean threshold of this bearish order block. Order flows clearly bearish. Trade up into this fair value gap, rejected. Trade up above this short-term high here. Absorb that liquidity and sold off hard. So this retracement up to a premium, we can then look to fade that as order flow is bearish, as I've highlighted. So I'm not looking to call a bottom in this market yet, and especially if you were looking to be a bull in dollar, that's not looking good. So we are seeing lower prices on dollar. So as I said, key levels here, rejected this mean threshold, displaced lower, and we traded below this weekly inversion fair value gap. So we'll come back to this in a moment, but looking at the downside delivery here, we also created this inefficiency here in blue. So looking at this, if we were to be bullish, I told you guys, I'm pretty much 50-50 given all the conditions that I've highlighted with the economic calendar and time of year, and also the technicals. So looking at 50% here of this dealing range, we were inside of equilibrium. So dropping down to a daily chart real quick to explain this point. So looking at how we are in equilibrium here, 50%, we consolidated, which is what we expected equilibrium. So when price action is showing me a willingness to not want to move higher or lower, I'm not going to try to force it or fight what the market's going to do. If it's going to consolidate, I'm going to let it consolidate until it shows its hand. And for those of you guys that are in the Telegram group, I updated you guys midweek. I said dollars consolidating, although I do favor lower prices, as I highlighted in last week's live stream. I'm just going to wait for it to show its hand. I'm not going to force anything or concern myself with this move higher. I said if we're going bullish, we'll close above this weekly inversion fair value gap and sustain it. However, we rejected that, and now we got that confirmation, which is the institutional footprints, which is displacement. So whenever we see large displacement, we can confirm that institutional sponsorship is behind that movement. So back up to the weekly chart here, as I was highlighting, consolidating around 50% equilibrium, not showing a willingness to want to go anywhere. So we tried to rally above this blue fair value gap twice, and then we failed to. So this previous week trading, we opened, we traded up the previous week's high, swept that liquidity, and immediately rejected it lower. So order flow is still bearish. And then looking at this inversion fair value gap that I said we'd come back to, look at how the bodies are telling the true narrative. So we see the bodies are being held within this fair value gap, which is an algorithmic signature that price is weak. So the wicks can color outside the lines, do the damage, run for stops, but we want to see where we close and open, as that's going to give us that true story. So given that we took out previous week's high, rejected, we were unable to sustain a rally above this fair value gap here. I'm going to be looking for this short-term sell side here as a first objective, and then I'll be looking for these equal lows here, and then the sell side below the external range liquidity. But before getting into that and getting all excited about this target here, we need to see several things, and then this is where we'll look at the bond market next. It depends on how we trade below these lows. So if we trade below these lows and reject, we could see a reversal or just further consolidation. However, because order flow is bearish, everything's pointing to lower prices. First target here, second target the equal lows, third target the sell side. However, that depends on how we trade below this low. So I want to see us displace through it with energy, not trade below and reject it higher immediately. So that's what I'll be looking for on a weekly chart going into this week, and I'll be expecting continued weakness on dollar index. All right, so going up to the daily chart. All right, so that same level there, that mean threshold, that 50% of that weekly order block, trade up into it, rejecting lower. So we were looking at these last two up close candles in the previous week, and I was saying how as long as we remain below them and this weekly fair value gap here, this would confirm that we are still bearish. So we saw a little retracement here. So understanding the price delivery continuum and how this is consolidation, expansion, retracement. After retracement, we expect that continued expansion lower. So this is what I'm looking at right now and what I'm favoring as a draw on liquidity. So I also like how we traded above this high. We traded above the high and rejected it with strength, as I said, indicating order flows bearish. Now, taking our attention here to these two down close candles, that's our propulsion block, because it's a order block nested within this order block here. So we were seeing support here until we took out previous week's high, and then we rejected and melted right through it. So the fact that we're not showing respect for this propulsion block here indicates to me that we're still in a sell program, or the algorithm's going to continue seeking discount levels. So I do like the signatures we're seeing here. We traded up into this weekly fair value gap on this daily chart, rejected it, smashing through the inversion fair value gap and the propulsion block, indicating that order flow is bearish. So as a first target on last week, again, just looking at the daily chart now, these equal lows are much more cleaner here. We can see that better. I like the sell side here, and then as I said, how we trade below that. So I want to see us get below this daily fair value gap in purple, use it as resistance, so use it as a ceiling, be unable to get above it, and then trade lower into the rest of the discount arrays that I have highlighted here. Another thing to mention as well is we do have a breaker in here, this down close candle. I'll go ahead and highlight that, extend that out. And I'll make it orange. So looking at this key level here, definitely something you want to have on your chart and pay attention to, because we could see a retracement, because this is a bullish order block. We could see a respect for mean threshold, a potential retracement before dropping lower. But if we are going to go lower, the invalidation level would be this breaker and fair value gap here in purple from that weekly chart. So if we get above that, then I'm going to have to reanalyze, reassess, see where we're at, and then potentially look for higher prices. However, as I said, I'm favoring lower prices, but this is an invalidation zone. So just some things to keep in mind and monitor going into the coming week. So let's go ahead and drop down into the hourly chart now. All right, awesome. So looking at last week's delivery, as we discussed, Monday opening price here, let's go ahead and mark that out. So the week began trading here at this level on Monday. So Monday, just typical Monday, but given that we have a bank holiday following that Monday, we're going to expect lackluster delivery. So pretty much consolidation profile into Wednesday, and then Thursday into Friday, we start seeing this animation. So this is why I'm not focused on the markets. There's nothing of interest to me in here. There's much cleaner markets, better times to trade as we see Thursday and Friday. So my attention was in the latter portion of the week, given the economic calendar and how it indicates this to us. And that's the nice thing about these concepts and why they're superior to everything else, in my opinion. Obviously a little biased, but it is what it is, and the results speak for themselves. So the reason I like that is because this isn't a surprise to us. We're forecasting consolidations, we're forecasting manipulations, and then we're forecasting expansions. So once you understand what the algorithm's telling you and communicating, it then becomes easy to read these things. So let's go ahead and look at a little bit of last week's delivery so that we can use that for our forecast going into this week. So this here was our stop run, our Judas swing into that previous week's high that we were looking at on that weekly chart. So a lot of liquidity would reside above that high, which would be a perfect counterparty if smart money's looking at these equal lows here, this sell side here. It's advantageous for us to see the market rally to a premium. But then note where the bodies are closing near that weekly fair value gap. And then looking at some more advanced order flow theory here, we'll look at this wick from high to low. Split that up into quadrants. And then for those of you guys that have studied with me longer term, you guys know exactly what this is. The fact that we rejected the lower quadrant or the lower 25%, that indicates the market's weak because it was unable to even sustain a rally to 50%. So now that we start seeing this, we see we break down, we start getting several confirmations that the market is indeed weak, and then we see that nice sell-off into non-farm payroll. So going into this week, we have that higher time frame breaker on that daily chart here we were looking at, so we can extend this through. So what I'll be looking at here on the week for dollar index, paying special attention to this fair value gap in here. And this is where I'll be interested to see how we trade. There's no reason for us to get back up into here. So this is why this is my invalidation zone. If we get above this purple level and start using it as support, then we'll potentially see higher prices. But the reason I'm not favoring this having to be delivered to is because this is all balanced. We see we traded lower, trade higher, immediate rebalance here, but we see that this all provides back and forth price action. So this is already efficiently delivered. So if we are going to go lower, there's no need for us to trade higher than this fair value gap. So this is why I'll be looking for going into this week, some type of Judas swing higher into this key level, and then a sell-off into the levels we're looking for from here. So I'll be monitoring Sunday into Monday, seeing how we trade at these key levels to then procure that information. So with that, I think that's it on dollar index. Shared my targets, what I'm looking for, what would invalidate it. Beautiful. All right, let's go ahead and take a look at bonds. And then we'll segue into Euro. As you guys know, just making Euro part of the usual programming here, as we got quite a few Forex traders, so I'll definitely continue to include that in the analysis here. So let's go up to a weekly chart, share some things here on the bonds. So just kept some notes in here so I could refer to them. So looking at T-bonds, longer term bearish order flow, we see we have this breaker in here, high, higher high, lowest down close candle, extend that through. Note the weakness within this key level, and then also looking at the 50%, note how none of the bodies were able to get above mean threshold. So we have several things indicating this market is weak, and then we called the sell-off here lower into these key levels on bonds. Looking specifically at this weekly fair value gap here, and then look at the bodies beautifully respecting the high end of this inversion fair value gap, indicating what? That the market is weak. So as I said, we were in consolidation here for about a month. And I said to you guys, this isn't anything I'm interested in really looking at or having an opinion until we see that displacement lower. And then we saw that in the daily chart. And then I'll go ahead and cover that. but also looking at this fair value gap in here, this SIBI, extending this through. Note how the market got weak in these key levels, unable to sustain a rally. So nothing confirming bullishness here on bonds, which is why we're seeing a nice spike in the yields, which I will cover what I'm seeing and the ramifications that will have on the dollar index. So looking at this same key level, let's go ahead and refine this fair value gap to the daily chart. Beautiful. Okay, so here we were consolidating sideways within that weekly fair value gap, and I said this is of no interest to me until we see a displacement. So looking at the previous week here on Thursday, we saw a sharp move lower, creating a fair value gap, shifting market structure here. And then we traded back up into this fair value gap and bearish order block. And then we saw a nice sell-off attacking the lows here, trading down into this inefficiency and order block. So now we have that confirmed bearishness here on bonds. So I will be expecting lower T-bonds going into the next coming weeks. So as a first target, I like the sell side liquidity here as I have outlined. And then this weekly level here is a weekly bullish order block. So I don't know why that's a negative. One moment. And let's go up to the weekly chart so I can show you what that's anchored to. So that's anchored to this opening price in here, this down close candle. So on the daily chart, my objectives are the sell side and then the remaining portion of this inefficiency, which would be here to here, because this traded down into this portion of the inefficiency, offering both sides. So now this is where the true inefficiency is. So I'll be looking for repricing to this inefficiency here and then seeing how we trade inside this weekly bullish order block. So these are my 3 downside levels for T-bonds going into this week. So now let's go ahead and take a look at the yields real quick, share some things I'm seeing in here. Let's look at this on a weekly chart. So quite a spike on the interest rates. Let's look at the 10-year. So I'm referring to both of these when doing my analysis. And then I don't know if it was last week or a few weeks ago, we discussed this SMT we were seeing here. We saw the 10-year yield refusing to make that lower low, whereas the 30-year yield is, indicating this one's under accumulation to go higher. And then we also see an SMT here, where 30-year yield's unwilling to make that low, whereas the 10-year yield was. So let's look at the relative strength analysis and how you can use this for trading. So this applies to all assets. I know we don't trade the interest rates themselves, but this applies to all assets. So let's go ahead and drop that into a daily chart, and I'll share with you guys how I use this relative strength analysis. So given that the 10-year yield was unwilling to make this lower low here, whereas the 30-year yield was, this is indicating to me that this one's under accumulation of longs. So looking at this one here, from this low to this high, the movement was 10.4% of upside within this range. Looking at that same range on the 30-year yield here, from the same candle, the high, we got under 7% movement. So let's say this was euro and NASDAQ, euro and pound, or S&P and NASDAQ. Which one's the better long? The one indicating it's under accumulation. And then you see you get much more bang for your buck going long the relative strength leader. So as I said, that applies to all assets. So I'm using this to forecast higher bonds. So what's interesting now, and Dash, I believe you had this question regarding, okay, we're seeing yields spike, but we're seeing the dollar lower. So one thing to keep in mind here is that yes, we eventually look for this symmetrical market, and symmetrical market is yields higher. We would expect the dollar to follow suit. But it also could be an early indicator as well. So everything I'm looking at for dollar for right now, until proven otherwise, is bearish. We're looking for lower prices. So I'm potentially using this to forecast a quarterly shift. So if we are going to go higher on dollar eventually and look to have a symmetrical market with the bond yields, we could still trade below these lows, reject, and then trade higher. So I'm using this intermarket analysis and weighing these things out. But because I'm seeing yields higher, that doesn't mean I'm automatically going to buy dollar, because the market, there can still be a lag time between these assets. So eventually dollar will always bend the knee to what the yields are doing, but it doesn't need to be instantaneous. We can still trade lower, trade to these discount levels, and then eventually reject and continue higher. So it all depends on what the market's going to do and what it's showing to me. And to me, it's communicating we're going lower. And as I said, until it proves otherwise and shows me it's willing to go higher, I'm going to stick to my guns and continue calling this market lower. So that's what I'm seeing here on bond yields. So expecting higher yields. And then given that this week is non-farm payroll, this previous week, that's one of the most manipulated weeks that there is. So it's no surprise to me seeing the dollar screaming lower and seeing a nice rally on yields. That's just characteristic of a typical manipulated week like non-farm payroll, which is why most professionals simply stay out of it. Just because why trade these shitty market conditions when you can simply wait for high probability and execute then. So just my 2 cents on what we're seeing and what I'm expecting moving forward. And as I said, always willing to adapt as the market shows me otherwise. So let's go ahead and take a look at our Forex. Go ahead and take a look at Euro. And then for those of you guys that trade pound, same thing in pound as well. All right. So looking at the weekly chart here, we've been calling this thing higher as we've been calling dollar lower. So we have this weekly order block, and we've been discussing this volume imbalance up here for some time now as an upside draw. We trade up to it, stop just short, and retrace down to the order block, also optimal trade entry here to continue higher. And then we saw a nice reaction off the order block, beautiful respect of the bodies, and then we saw a nice displacement higher. So the past couple weeks, obviously given that we've had a new monthly open, new quarter, and non-farm payroll week, this consolidation here, this sideways movement is of no surprise. So I'm still, the things I'm specifically monitoring is order flow still bullish? Are the signs and the clues that the algorithm's providing, is it still confirming to me that we're going higher? And the fact that we're seeing previous week's low swept, immediate rejection, we're seeing support inside of this weekly fair value gap in here. This is all confirming that these upside premium targets are still a green light. So looking at the weekly chart for Euro, my first upside target will be this short-term high here, this external range liquidity of this range here at the 1.11 big figure number. And then I eventually like delivery into this volume imbalance, as if we get above these highs, it would be expected to see this volume imbalance delivered. And then how we trade here will be interesting. And then we'll also be watching dollar as well to see how we trade below those lows. Do we accelerate or do we reject and trade higher? Those are all things I'm going to be willing, or I'm going to be waiting to see pan out. For right now, trade the market we have in front of us, which is risk off, lower dollar, or risk on, excuse me, which is lower dollar, higher foreign currency. So another thing to note going into this week is this inversion fair value gap. Now that we closed above it, we don't want to see price trade back through it. So as long as we remain supported here at this inversion fair value gap, I do expect higher delivery into these premium levels I've highlighted. So dropping down into our daily chart, let's refine this some more. So keep in mind, I'm transposing the higher time frame PD arrays into my lower time frame charts. So this is that weekly order block, weekly fair value gap here and here. All right, awesome. So seeing that we've retraced, bit of a consolidation, we swept the lows, rejected, indicating what? That order flow is bullish. So now that we closed above this fair value gap, as I mentioned here, I'd want to see us stay supported above it, potentially use this as support as a launch pad to send us higher into the buy side liquidity here, and eventually these relative equal highs. So as you guys know, I've been swinging Euro as a swing trader. I've been going long and then looking for higher prices, was waiting through this, and I'll be looking to continue opening positions for swing trades going higher into these key levels. So that's personally what I'm looking at and what I'll be looking to do this week. So let's drop down into our hourly chart here, just as we did with dollar index. So same thing here, this back and forth price delivery. There's no reason for us to get below that. As long as we remain above this purple level, this fair value gap here, and then this smaller fair value gap on the hourly chart, everything is still bullish to me and I'll be looking for higher prices. So same as we were seeing on dollar, I will be looking for that same thing on euro dollar. So let's go ahead and get into the S&P. So S&P indexes are a bit interesting right now, seeing some S&T at some premium levels, also with a weaker dollar. So it'll be interesting to see how we move forward with S&P. So before we get into it, I'm going to share with you guys that right now, my analysis on S&P isn't 100% clear. For example, when we were down here, we were clearly saying this market's going higher. First target was this volume imbalance, then the buy side, then fair value gap, then this weekly volume imbalance. It was very direct, straight to the point. We're going higher. Right now, I don't have that because we've already seen a quarterly move unfold. We've called this thing hundreds of handles higher, and the NASDAQ thousands of handles higher. You guys saw examples of me swing trading this in the Telegram. I would share some executions that I was doing. So lots of money made on this move up. Now I'm just going to wait for more information. These moves on a quarterly basis, these long-term swing trades, they take time to manifest. So I'm going to allow the market to work out whatever it's doing here and show me indication of where we're going to go. Are we going to go higher? I'm not sure. Are we going to rip lower? I'm not sure, but I am favoring that. I am favoring lower indexes. However, there's a few things I want to see as confirmation. And then as most of you guys know, I'm not in the business of calling tops and bottoms. So that's why I'm 50-50 and I'm refraining from having a hard line bias going into this week. However, that still gives me plenty of opportunities to intraday trade and trade intraday volatility using key sessions, highs and lows, regular trading hours, and everything like that. So with that being said, let's go ahead and get into the technicals now. So we had this down close candle. That's our bullish order block. Last week, we traded down into mean threshold, 50% of that. And then we stopped and closed higher. Nice little TGI back into the range. But given that order flows bullish, we traded down into this fair value gap, rallied down to this mean threshold, rallied. I'm going to avoid calling a top on this market on a weekly chart because we could easily spike once more, pump into this before dropping lower if it wants to drop. Or if we want to continue higher, we can easily continue rallying from here, also given that we have a weaker dollar. So what I'm communicating to you guys is I'm waiting for more information and I'm going to allow this market to show its hand before having a hard line bias and then calling longer term moves. So awesome. Looking at the daily chart now, then we'll go ahead and use some intermarket analysis. Look at the NASDAQ and Dow. We're seeing some key SMT at the highs. So just at first glance, looking at this market looks extremely heavy. Nice down close, closing inside of these key levels, BPR here and this fair value gap. Opening on Friday, rallying higher, immediate rebalance here, and then immediate rejection trading lower. So also looking at this, trading up into consequent encroachment, 50% of this wick, and then rejecting that. So we're seeing signs of weakness. However, given that we haven't even broken this bullish order block yet, I'll mark that out here. I'm going to be weary about calling a top in this market. As you know, that's predominantly a loser's business. We do not try to do that. So as long as we're above this order block, I'm going to continue saying I am bullish just because we have been. I'm always going to give you guys my opinion, even if it is 50-50. But I am favoring weakness as well because of the signatures we're seeing. And now let's ring in some intermarket analysis and confirm that further. So let's look at the YM and the NQ. All right, so here we're starting to see SMT divergence at the highs between correlated assets. We're seeing S&P here made a higher high. While we're seeing NASDAQ and Dow fail to make these higher highs. So is this an early SMT confirming a potential quarterly shift to come? As I said, that's what I'm favoring, but I'm going to wait for more information to avoid trying to call a top. So looking at Dow though, exceedingly weak, traded up here into this rejection block, immediately rejecting lower and about to shift market structure here, showing no respect for these fair value gaps in here, completely closing below it and trading lower with the fair value gap. NASDAQ and S&P much more reluctant to drop, but as we've been looking at, let's look at this on a weekly chart now. While the S&P and NASDAQ were rallying, Dow was not joining the party. So is this early confirmation that the Dow is under accumulation of shorts? That's something I will be interested to see here moving forward. So we do have a potential SMT divergence forming, which could be setting up our quarterly shift. However, that's going to depend on what we do on dollar. Once we trade below those lows in dollar we're looking at, we would need to see bullish confirmation in dollar to eventually send the indexes lower. So these are just some things I'm looking at. Seeing that SMT divergence, but we still do have this volume imbalance. So the reason I'm not trying to call a top in this market, because we could easily pump up higher once more, reject, and then resume lower. So that's why I'm avoiding doing that. So as long as we remain above this fair value gap, as long as we remain above this order block and this balanced price range in here, which we are still showing a bit of respect for, I'm bullish. However, once we start closing below these key levels on a closing basis, then I take my attention to this sell side liquidity here at the 43.6850. Beyond that, we trade into the sell side here at the 4,300 even. And then we have this inefficiency here and here that the market would want to reprice to, assuming we start getting acceleration on the downside. So let's go ahead and drop into our hourly chart now, share some things that I was sharing with you guys last week. So we did get what I was looking for in the indexes only on NASDAQ. So what I shared with you guys here is I'd like to see a nice drop lower into this discount fair value gap and then a rally higher. S&P didn't give that. The NASDAQ did. NASDAQ traded lower, rallied right above that high into the key levels we were looking for, but it was unable to sustain it. So I was internalizing this as SMT divergence, because looking at this here, we see the NASDAQ made a higher high, whereas we can clearly see here that the S&P, let's go ahead and pull up the Dow. And we can see here that the Dow, S&P were not having any of that. So as we can see here, the Dow was the relative weakness leader because it was under that accumulation of shorts as indicated by that SMT divergence. So seeing NASDAQ make this higher high here, not being confirmed by the other indexes on an hourly chart as well as the daily chart, is noteworthy. So now let's refine this even further into our hourly chart. So I love seeing these kinds of things here. If I'm looking for the market to drop, I love seeing bull flags like this. And then this is consolidation time distortion from Monday all the way into Wednesday's trading. This is why I wasn't looking to trade this. This is of no interest to me. And as I said, the nice thing about our concepts is they give us the ability to forecast these things. We're never surprised by consolidation, by range-bound environments, because the market's always going to indicate that beforehand, and then we covered that beautifully. So we saw that drop into this fair value gap here, and then we were unable to sustain it. And then another key level here, looking at the regular trading hours gap, I took our attention to was this void in here where we had no trading. I said the market would likely want to pull back into that and offer delivery. So we saw that here going into Thursday. And then we also have this inefficiency here where we have this liquidity void where no trading occurred. And then we repriced this level here. So as I said, I don't need to have a confirmed weekly, daily bias to trade. I can still scalp and intraday trade just the intraday volatility. But for swing trades, nothing yet that's obvious to me in S&P. Once we start getting displacement or confirmation, then I will look to potentially start opening up longer term positions in the index markets like I am in the foreign currency markets. But for right now, I just don't have that longer term clarity. So now taking our attention back to this price action here, we had this SMT between the NASDAQ and S&P up here, and then we saw a nice rejection lower. So given that we saw this displacement indicating the market's weak, this retracement here I was monitoring. I was saying, okay, how are we going to trade within these premium levels? So we have this premium fair value gap. Why this fair value gap? I like this one because from high to low here, it's the first one in a premium. So this would be a nice upside objective. And as also highlighted, given that we had this void in here, the market's going to want to reprice into that. So that gave us a nice, easy bread and butter setup into non-farm payroll, just expecting that repricing there. And then what was noteworthy was the rejection of this fair value gap in premium. The fact that we traded up to the high end of that perfectly, reversing all the gains that we put on in the morning session. So seeing that rejection lower, this is confirming bearish order flow to me. So what I'm going to want to look for going into this coming week on an hourly chart is I want to see these relative equal lows. It's interesting how they left that and how we also have sell side below here. So acceleration through this key low in here takes us into the sell side below here. And then we have an inefficiency here. So trading below this low, my attention goes to the lows and then the inefficiency here. but that's going to depend on how we trade in this fair value gap. So let me go ahead and mark that out. So this is going to make or break what we do this week. If we trade up into this fair value gap, get weak, and start accelerating lower, then as I said, everything's a green light to expect lower prices, and we already have all the confirmation behind us. However, if we start trading through this fair value gap, then I'll look for these relative equal highs here and that weekly volume imbalance. So I'm going to want to see how we trade Sunday going into Monday to then utilize that information, that intel that the market's providing to indicate where it's going to want to go and why. And then I know we have quite a few index traders in our group, so I'll definitely be sure to give you guys updates and keep you all abreast as to what I'm seeing and what I'm expecting here moving forward. So these are the two scenarios here I'm seeing for S&P. I give you guys the confirmations, what would invalidate what I'm looking for. And there's that. So that's going to wrap it up here for the analysis. And I'm going to go ahead and take some questions now, see what you guys are looking at, take a look at some markets for you guys, and then bid you guys farewell. Christian Cadet, when you have the time, Dylan, could you make an example of a market for someone like me who trades in the morning with silver bullet? Because EU and GU is hard for me lately. Thank you. So my personal market, I love trading the S&P. It's very professional, clean market, moves very nicely, very clean in its delivery. So I personally like S&P market. If you want to specifically focus on Forex, there's other majors. If you don't like euro and pound, there's Aussie dollar, New Zealand dollar. I don't like the Swissy too much, just because it's more like a yen manipulated pair. So I personally don't focus on it, but that would be a much more appropriate question for my colleague Tommy, who is a specialist in the Forex market. So I definitely direct that question to him if you want to stay in the Forex, the foreign exchange trading, or you can come over to the index side. And you know how I think about that. So that's all up to you, Christian. Hopefully that was helpful, my man. Appreciate you joining us. Ashley Elkins, I want to try my hand in a few Forex trades. What broker do you recommend? So I do not recommend any brokers, especially Forex brokers. A lot of them are shady. They're all shady. I'm going to keep it real with you. But some are more reputable than others. So that, like I said, that would definitely be a much more appropriate question for my colleague, Tommy, who specializes in that market. I could recommend some index futures brokers, but not Forex, as I don't trade Forex in personal accounts. I completely do that on funded accounts just because I don't like incurring risk in the Forex markets, especially with all the potential black swan events. We have digital currency coming soon, a bunch of different things. So I personally don't want to expose my personal capital to that risk. Hanny, we are well, Denisha. Hope your week was great. How's everyone? Hello, Hanny. Thanks for joining us. Boundless Lord. Hi, everyone. Is this weekly call at the same time? Denisha covered that question. Yep, absolutely. We're here every Sunday at 4 p.m. Thanks for joining us, Boundless. Thanks for answering the question, Denisha. Appreciate that. And then Denisha, yep, shout out to the Telegram group where we'll update you guys, give you notifications as to everything we're doing, what I'm looking at, and we also provide midweek updates with regard to what is salient to me at the time in the marketplace. So all good there. Dercelio, hey Adora, hello, appreciate you joining us. Noller, can you look at gold and crude oil? Yeah, for sure. Let's go ahead and take a look at crude. All right, crude's interesting. We're starting to get some movement now, so I'm definitely directing some attention back into this market. So let's break this thing down, top down. Let's look up the chart. All right, so we've been longer term bullish ever since the pandemic or the illness was around. We saw that spike lower into the negatives for gold, crude oil. Since then, we've been seeing bullishness, and then this to me is just a retracement. So again, looking at the phases of delivery, we have expansion, retracement. I think we're in retracement to then continue another expansion higher in crude oil. So I've been monitoring this for some time now. I'm patiently waiting for us to leave this consolidation. And until then, I really don't have much interest in it because I just don't have that same top-down clarity that I typically have in other markets that I look to trade. So if it's not clear one-sided to me, I don't do 50-50. I'm not here to gamble. So looking at that key level, and then I'm not sure if I pointed this out, looking at this monthly order block, beautiful support there, finding support at that mean threshold, also this fair value gap. So beautiful respect there, that's noteworthy. So if we are going to rally, I do expect us to do it from here. So dropping down into a weekly chart now. As I said, retracement lower back into the range we created. Something that's also noteworthy as well is looking at the sensitivity around 50% of this wick. So looking at this wick, algorithm refers to it like an inefficiency. We're seeing here that the 50% or consequent encroachment is finding support. So the fact that we're unable to rally through that is indicative. And then I like this as a key low here because this low ran sell stops. So this becomes a significant low to me. So I personally don't intraday trade crude oil as much unless we start getting consolidation in S&P. I'll direct some attention to crude. But longer term, if we start seeing some displacement, some confirmation that we're going to move, then I will definitely look to start taking advantage of some upside movement here on crude oil. So down to the daily chart now. Let's go ahead and refine this. So trading down into this rejection block here multiple times, that lowest closing price here, and then created a low, swept that low once more, traded lower into what level? Consequent encroachment. So looking at this wick here, let's go ahead and make this adjusted. So beautiful delivery on crude, looking at this wick, 50% extending that through. So that 50% there is 67, right here, 67.07. So looking at the low of this candle up here, low is 67.05. So 2 cents difference, beautiful reaction at that discount level. And then we've seen a nice rally since then. So since then, we've seen us trade higher, shift the market structure, and trade through this bearish order block in here. So the fact that we're trading through a bearish order block indicates that order flow is now bullish as we're violating premium arrays and looking at this key level as a order block. Now that it's been violated, I'm going to look at it as a breaker because we have a low, lower low. So if we are going to rally in crude, we should stay above this level here. So we see how we spent time there, accumulation. And now that we're above it, I would want to see this level act as support to send us higher if we are going to continue rallying on crude oil. So if we see a little more follow through in this market here moving higher, then that would definitely be interesting for me to potentially look for some longer term positions to take advantage of the movement we're going to be seeing in commodities here pretty soon. But for those of you guys that work with me, that I do provide advice to and help me out, help you guys out, you guys definitely know that commodities, grains, energy is definitely something we're looking for explosive movement higher. So I like these relative equal highs, assuming we continue showing that bullish order flow. We start using discount arrays as support. I definitely like these equal highs here. A lot of liquidity, very juicy level for the algorithm to want to reprice to. So that's what I'll be looking at on crude. Highlighted the breaker. As long as we stay above there, we're bullish. No reason to come below it. All this delivery here is efficient. We've traded up, down, up, down, up, down, and left it. So this is all balanced price range. So there's no reason for us to violate that if we are going higher. And then I was asked to take a look at gold. Yeah, thanks, bro. You're welcome. Thanks for joining us. Let's go ahead and take a look at gold. All right, so I look at this asset every week. I always got people asking me, take a look at gold, and every time I look at it, it always looks the same. It doesn't go anywhere. So looking at gold on here, we saw a lower retracement down into this fair value gap, and we've just pretty much been consolidating there. I told you guys last week that as long as we remain above this balanced price range here, we should continue higher. And we do see, and the way we treat balanced price ranges is we don't want to see a body close below 50%. So we're seeing the wicks use it as support, and we're not closing below it. So on a longer term basis, I'm looking at this as a retracement, given that we are longer term bullish, and we also have relative equal highs up here. So this is all something I'm noting. And ultimately, I do think we have unfinished business above these highs. However, we do have to remain above this balanced price range here where this inefficiency overlaps with this. And then we saw a beautiful repricing there, which was a downside objective. And then now that we're finding support, I'll be interested to see if we want to rally from here. So dropping down into our daily chart. So looking at this same key level here, that weekly balanced price range, seeing support there. And then we've pretty much just been range bound here, a little bit of movement lower, range bound. So as long as we're range bound, like I said, gun to my head, I'm expecting higher prices just as a result of the order flow we're seeing top down. However, as of right now, this isn't anything that has favorable trading conditions. Just for example, look at from this period here to this period. This is 21 days or 3 weeks of sideways price action. This to me isn't personally high probability, and in my opinion, there's much better markets to trade. However, if you're certain this is the market you want to trade, I'll still give you my analysis and what I'm seeing, which is higher prices. However, I would definitely want to see us stay above this. Below this, we then reprice down to these inefficiencies here, a little bit of sell side there below this low, and then this inefficiency and order block would be a draw if we get below this balanced price range. But as long as we stay above it, looking for higher prices just based off that higher time frame order flow. Mr. Nuller, thanks for the analysis. Makes perfect sense that the breaker should support price to go higher. Absolutely. Absolutely. Hey, Dylan, I haven't had a chance to look at USD CAD and oil. Just wondering if you see any high probability trades, or did I miss the moves this week? Okay, so I covered oil. Hopefully that clears that up for you, Denisha. And then let's go ahead and look at the dollar CAD. So yes, we've been seeing quite a bit of movement here on dollar CAD. So I was doing some personal analysis in this asset. We traded down into this bullish order block in here on a weekly chart. Here, found nice support and rallied higher. So my draw on liquidity, or what I was looking the market to draw into, was these inefficiencies up here. So we had one inefficiency here and here, and then we repriced to this one here nicely, and then we traded lower off that. So that's what I'm seeing here on a weekly chart. I would still be interested to see if we want to reprice higher into these inefficiencies, but that's what I'll be looking at on a weekly. Let's refine that further on the daily chart. So what I did like for the USD CAD is this order block here, the consecutive down close candles. And I get this question a lot. Why these two and not this one? Because this one has a lower closing price. So remember, most of the volume is contained within the bodies. So the algorithm and smart money is going to refer to this as the order block because it spent most of the time with that downside delivery. We trade through it here. There's a change in state of delivery here. So this is the order block. So as soon as that order block formed, we saw that shift in market structure here. Longs were valid in this market up to these key premium levels. We have relative equal highs here and here. Found support from this fair value gap here on that daily chart, sent it higher. So what's interesting here is not seeing that much follow through as we saw it immediately trade back into the range. So for USD CAD, what I'll be looking at on CAD is as long as we remain above this fair value gap here and here, we should see higher prices. So because this has dollar first, for this to go higher, we should see a stronger dollar. So given that we're not seeing a stronger dollar and the dollar's weak, that'll definitely put some pressure on USD CAD. So if we get below this fair value gap in here and this order block, or this order block right here, excuse me, I would then look for lower prices, looking on a weekly chart. Trading back down into this order block, through that takes us into this order flow in here. We have a down close candle order block, split that into 50% mean threshold to get some targets on the downside. But if we reject here, and then on the daily chart, specifically trading below these discount arrays, being this order block and fair value gap, getting below that sends us lower into this inefficiency, the sell side, and then the levels I indicated on the weekly chart for that order block. So that's what I'm seeing here on USD CAD, and then highlighted plenty of opportunities that we're seeing here in the foreign exchange market on the pound as well as the euro. And then I'll actually cover something that my colleague and I are working with right now, which is AUD CAD. So I shared some analysis in the chat with you guys opportunity that I'm taking advantage of on a swing trading basis, and that our team here at Adora Trading is working. So we're looking for higher prices. Again, down close candle, bullish order block, qualifying that, sending us higher, and then we gave that target in here. So a full breakdown will take me a bit of time to do, so I'm not going to go ahead and get all into that. Take a few more questions, and then go ahead and wrap this up. But once we get delivery to these premium levels we're looking for, as long as bullish order flow continues, I'll go ahead and give you guys a detailed breakdown on why we were looking for higher prices, and go ahead and recap that trade breakdown. Awesome. Denisha, yes, thanks for oil. Awesome. That's helpful. Hatim, thank you, Adora, for your time. Very appreciated, man. Thanks for joining us, and thank you for that. I appreciate it. Denisha, thanks again. Always appreciate your time, my man. Appreciate you joining us and for the support since day one. Means a lot, and glad this is providing value to you guys. So with that said, let me go ahead and check the Telegram chat real quick for questions. Dash covered your question. The lag time, anticipating quarterly shifts, subject to confirmation. Exactly. So that's exactly what I'll be looking for, and how I'm internalizing the information that we're seeing in the candlesticks or in the price action. So glad that helped you out there, Dash. Awesome. So I think we're going to go ahead and wrap it up here, guys. Really appreciate you guys sharing your time with us, joining us on this Sunday. Wish you guys a great week. So good luck and good trading. Keep in mind that economic calendar, CPI on Wednesday. Definitely something to be mindful of going into this week. And then high impact news drivers the latter part of the week. So I'm interested. Wednesday through Friday are the days I'm going to be heavily in here, looking to take advantage and create some opportunities here in the marketplace of what we're seeing. So with that, I bid you guys a farewell. See you guys in the Telegram channel. See you guys next week. Hope you guys have a great week. Good luck and good trading.